Welcome back. Well, going strong for the Nifty. In fact, the Nifty is caught up in terms of gains compared to the mid-cap index. So the mid-cap index is up around 0.7% and the Nifty also is showing that much of a gain. In fact, we're just about 2 points away from that 7,900 mark. So good time to get in some stock ideas as well as some more opinion on the markets. Mayuresh Joshi of Angel Broking joins in now. Mayuresh, hi. Good to see you in. Before I ask you about the markets, I actually wanted to know your thoughts on the entire auto space. What is your sense in terms of this whole consumption story possibly benefiting from the 7th pay commission, and would you be a buyer into, say, the likes of Maruti, which is already run up around 40% year to date?
Morning, Ekta. I think clearly if you distinguish between the earlier pay commission payouts and what is probably coming through right now, again, I think there has been a distinct reduction happening in terms of core numbers come through. However, having said that, I think our take is that a slow and gradual recovery, both in terms of volumes, not just for the auto industry, I think generally for the white goods industry, which includes a lot of the air condition manufacturers or even the FMCG universe, the lower end of the value chain will probably start getting benefited. Having said that, probably I think stocks like Maruti, which have got a good product mix, which ranges probably at the lower end of the market as well, with the kind of market share that they've got, with the kind of benefits from commodity cost deflation that we're probably witnessing at the current juncture, we're still maintaining a positive view. Again, I think the volume uptick because of pay commissions, I think it will be slow and gradual, but again, I think if you look at the core business and how the volumes are panning out, I think we maintain a positive view on Maruti Suzuki as well as the two-wheeler stocks. So I think Bajaj Auto, with the kind of margin improvement that they've witnessed, our take is that the 21% kind of margins posted should get maintained, and looking at maintaining that market share or taking it up around that 21% mark. And again, I think the entry-level bikes that Bajaj Auto has got, the CT100, the Platina, I think should see some amount of significant volume uptake over the next few quarters. So yes, I think we are having a stock-specific approach, but we do like Maruti and Bajaj from the auto bank.
Okay, well, the market is surging now. Look at the Bank Nifty's intraday chart, and it's really remarkable the way it's shaping up. State Bank of India put out the intraday chart of that along with ICICI Bank, and these stocks are leading the market rally. In fact, even in the mid caps, a couple of stocks, HCL Infosystems, that stock has gained about 5.5% in last 10 minutes of trade, and the other is Subex. That stock has also gained quite a bit. If you see the intraday chart of both these names, big gains in both these names. But really the story has been about the PSU banks over the last few minutes. SBI, PNB, Bank of Baroda, all seeing big intraday rallies. Mayuresh, good morning. First, so a word on some of these banking names and PSU banks in particular, which have been strong all through the month.
Morning, Anuj. Clearly, I think so. From the banking pack, the clear bias still remains with the private side, except a few blips that we saw probably in the Axis Bank numbers, where the ARC sales probably played on the stock. But clearly, I think ICICI Bank, with the increased branch network that we've seen, they've reported stable asset quality numbers, and with the exception of Axis, as I mentioned earlier, I think the private space is looking good on all parameters, including capital adequacy, including how their asset quality is expected to pan out. Yes, I think the exposure to stressed out sectors like infrastructure, steel continues for a few of these banks, but they will probably peak out. Within the PSU universe, Anuj, clearly I think State Bank is something we clearly like, and though the management has given guidance of restructured pipeline of close to 6,600 odd crores coming through, if you look at their overall gross NPAs plus the restructured assets to the overall advances, that ratio still stays around 8.05% compared to 8.55% in a simple peer comparison check on a year-on-year basis. Having said that, I think the capital adequacy for a state bank is equally good. The CASA ratio of 40% holds the bank in good stead. So our take is that if you adjust for the value of subsidiaries, the bank is trading at reasonable valuation. So State Bank within the PSU universe would remain one of our preferred picks.
Okay. Well, Mayuresh, GAIL has really been the star this week. It's gained 22% at current reckoning, including today's 8% gain. How have you read the news with regards to Petnet LNG and RasGas and the possible, reduction in the cost in the gas prices for them, and how it would possibly benefit GAIL?
So clearly, from both GAIL's and Petronet LNG's perspective, if I take these individual cases, I think the offtake with RasGas that was fixed at around 12 MMBTU, I think, and the spot prices that are currently loading around 7 and 8, it was detrimental in terms of how the offtake volumes were panning out, both for GAIL as well as Petronet LNG. Having said that, probably I think if you look at the price reduction or some amount of renegotiation happening on this front, it is incrementally positive. But again, I think there are a few concerns apart from RasGas. I think GAIL probably is struggling still on how their LPG and their liquid hydrocarbons business is panning out. Even on the gas trading front, I think you're seeing volume hit being taken, and even on the transmission front for GAIL, because of their underutilization of pipelines, I think the gross block has increased meaningfully, but the profitability has not. So I think incrementally positive in terms of renegotiation for GAIL, and similarly with the case of Petronet. Yes, I think with the kind of volume uptake that one really assumes, if renegotiation does happen, it will create a positive impact on how FY17, FY18 numbers will pan out. But the Kochi underutilization pipeline is going to create some amount of a dampener for Petronet. Again, I think the hedge is operating around 120% in terms of utilization levels. So one really needs to understand how the ramp up is going to happen. But yes, I think if the renegotiations do happen, I think it will have a positive impact in terms of how EPS pans out on an FY17, FY18 perspective.
Mayuresh, some of big stars of last bull market, names like Havells, Voltas, which were forgotten a bit over the last 3 or 4 months, are making quite a bit of comeback. Do you like some of these names?
So clearly, Anuj, I think if I again talk about how the discretionary spend has probably panned out for a lot of these players, I think they were going through tough times. Havells in particular, I think if you look at how their Sylvania operations have panned out, the kind of overhang that one really expects in terms of their pension liabilities with the kind of currency movement that we've seen, that still will have some amount of an overhang in terms of how margins will pan out for that stock. Again, I think Voltas, it's more a play on how margin play out happens, how the international order book stands, and how discretionary demand within the country itself stands out. So clearly, I think within the white goods space itself, Bajaj Electricals and Blue Star is something that we have preferred, both from a valuation perspective as well as top line growth perspective.
Okay, all right, Mayuresh, we've lost you on that note, but any which way, thank you very much for joining in and giving us all of those ideas. So that is Mayuresh Joshi talking about all the stocks which are in fact in news today. But let's get you some commodity strategies now.